standing 3 o'clock on this July 25th, 2024. What a pretty, another crazy day. At least this time, it's not all to the downside, about a 2% range on the SPY. Excuse me. And we'll see where we go from here. Last hour of the day, probably the last half hour is going to be interesting. We have PC data tomorrow, Fed meeting next week. Yeah, so lots of fun. So I guess the good thing here is the SPY so far has held the 50-day moving average. I guess we're right at it right now. 541 seems like a line in the sand. I was concerned if we break under that. 535 came, we got down to 537. I don't know. This last hour is going to be interesting. Excuse me. I think the PC data is, regardless if it just can't be substantially hotter than expected. I think the CPI data kind of put that to rest. I think as long as that's not substantially hotter than expected, we'll be okay. And then we have a lot more earnings heading into next week. IWM, again, outperforming. The S&P was just flat right now. The IWM's up 1.5%. We'd love to see it close over 222. If you look at the chart, looks like some consolidation, large consolidation, right? Large swings. This morning, again, the IWM down to 218.20, all the way up to 224.02. So it's a wide swing for the IWM. But hopefully that's a churn, buyers and sellers, tug of war, and then eventually the buyers win out and we can start heading higher. And then last but not least, the IBB Biotechs. Again, another big day. IBB's up 1.8%, multi-year highs. You start looking at some of the levels on IBB. I think it was 170 was an area back in 2020, maybe it was 2021. So would not be surprised to see that continue to head higher. So that's the overall market. Let me talk about some individual names. And lamresearch, which is actually right near lows again as I'm talking. But I was able to close the last of my puts out for 600% and the last for a little over 100%. The chips are rallying. So NVIDIA was down 6%, and all of a sudden it reversed into the green. I didn't want to be in a spot where I lost the last bit of the profits, so I closed them all out. And then I might revisit something here into the end of the day. I was thinking Broadcom, so I might look at those. I may look at some index puts, maybe some inverse plays like TQQQ. So we'll see. I don't sometimes I don't want to be in a spot where I don't have any protection heading into tomorrow. But I was able to trade, make some money today, lock some stuff in. So there's less risk on right now. But don't be surprised me see me add anything. I thought 860 or so on LRCX. So if it closes here at the lows under 900, I think the 860 comes. So if that's the case, I may look to get some lower inexpensive lotto. So right now, even though it's at lows, my 875 puts are 245 by 274. So they're not even, so it wasn't even worth it to hold the premium in there, right? So just another name I might look to get some hedge puts, but I think it's the second or third week in a row LRCX paid for always be hedging, right? Gold, just a disgusting day for gold. It was, I think, it had 2 days. Oh, actually, this is Gilead. Excuse me, Gilead. Back-to-back strong sessions to the upside over its 200-day moving average. I think some of it's on the news of its HIV pricing, and then they had more data on their 5-year long-term HIV treatment. I don't know exactly what all the catalyst is, but it just continues to go. And thankfully, I'm in the call. So the 80 strikes came back to life. Locked some of the August 80s in for over 100%. I'll continue to hold those. I think if you look at the chart on Gilead, I think it heads back over $80 in the coming weeks. And let's see when it traded over $80. I think it was back in right at the start of the year was $86. So I think it trades north of $80 in the coming weeks. So I'll continue to hold that. I have plenty of time on August strikes. And let's see when they're going to report earnings. They're going to report earnings August 8th. So hopefully get a run up over that 80 handle before earnings. I could lock some more in and then hold the rest for a possible move into the mid to high 80s possible, right? Especially if the IBB and biotech space and healthcare continue to rally. Now time to talk about gold. So lucky enough for gold to sell off today, up down nearly 2.5%. In tandem, the small caps were selling off in the morning, which pulled down the miners. I was able to close the rest of my nugget puts. I got them last week, so they weren't weeklies last week, but they turned into weeklies because I held them into this week. So I was able to close the last of those for 300%, and then I went and added some other strikes. So I looked at it, I thought $40. The 50-day moving average on Nugget is 41.50, but it got right down to that bounce. I I think it heads into the low 30s. So 30, 30, 36, 37. So that's kind of the thought process of getting those August 36 puts. And it doesn't even have to get to 36. Uh, I mean, by expiration, of course, it would have to get under 36 to offset it. But just in a week or two, if it drops under 40, those are going to be continue to gain premium. So that's one of the ways I'll play. Continued downside in gold. I think gold's going to test $2,300 in the coming days. Um, and then don't be surprised if you see me get some of the triple bear miners, the J Dust or the Dust calls. And if you look at this chop on gold from the start of April, it's been stuck between 23 and 2,400 for the last 5 months or 4 months. And if you think of all the reasons, and I do this on the rants too much, so one day I'll just do it all together, so you don't have to hear me uh, babble on about it. But the bull case for gold, or at least the reason it's good to have some kind of like a mix of different kind of indexes and companies and things in your portfolio, right? And gold's one of those things that probably part of the mix in a portfolio because it's very stable. It's a store of value, especially in times of turmoil. But when all those things have gone on, gold hasn't really reacted the way it normally do. Typically, and I said this yesterday, strong U.S. dollar would be bearish gold. And inflation would be good for gold. We had inflation and gold went up, but not as much as you would think. That was the big bull case back in 2008, 2009, the big bull case with COVID. And then, gold doesn't offer a dividend. So as yields go down, you would think that people would take the items that normally you have a high rate, whatever's yielding high. As the rates go down, the yields will be lower, and you would think gold would be more attractive because since it doesn't offer a dividend, it's less attractive. You'd rather get something that gives you a yield, right? So I mean, I can go on a rant forever, and so I'm not going to say. And central banks hoarding gold, all those stories. I remember reading pieces back in the day. China was hoarding all this gold, and maybe they are, right? And then all of a sudden they're just going to unleash it on the world, and they're going to be their currency is going to be the standard, right? That they're going to be on the gold standard, whatever. So and then, of course, now you have all these forms of these other stores of value now in regards to cryptocurrency. You have NFTs, right? You have all these things that store value. So uh, anyway, so I'm not saying it's going down to $2,000 from below. I just think there's an opportunity to play for downside. This chop has been between 2,400 and 2,300 for the last couple of months. It didn't break the 20. It broke 2,400 for a couple days, and then found some selling pressure and finding it again here today. I just think that just means it's going to $2,300. If it, I'll probably have some more positions to play for some overshoot, but that's kind of the target there. That's my thought process on adding GLD puts. I still have the August 210s, and then adding those nugget puts as well. So iRobot, take a look at iRobot today, up 11.5%. No news, no catalyst, no nothing, right? Crazy stuff. I mean, you look at the chart, it was $8 a week and a half ago. Now it's at $12. Well, knocking on the door at 13. I think once it breaks 14 and a half or so, it's off to the races. I keep going through filings, all the news, all the fundamentals, and previous quarters and stuff. So I have to put something together so I don't have time to rant about it on an afternoon or pre-market rant. But it's just interesting story. And so when Amazon was going to acquire them for 1.5 billion, whatever, $62 a share, Amazon iRobot in the summer of last year needed like a bridge loan almost. Like it's like if you had a mortgage, two houses, and you were in the middle of like selling out of one and getting into another, but you needed the money because you couldn't sell the first one yet. I don't like there's something called a bridge loan, right? So that gives you the availability. You go to somebody, and sometimes you're going to pay probably a crazy rate because you need to pay it off in a certain period of time. So that's kind of like the give and take, right? The person's going to provide you the equity, the cash, while on the flip side, you're going to pay them back quickly, but they're going to get a good return on their investment. The stipulations that Carlyle did for iRobot is they had to hold a certain amount of cash aside, which and assets, which I think is like 250 million. They also have to they can't use 40 million. They had to set aside 40 million in cash to buy inventory if they don't hit that threshold, and then they are guaranteed either a 1.4 or 1.7 return on their investment, which was $200 million loan. So I mean, you do the math, that's 80 million in profit. So there's a lot of different things with it, and there's ways they can go in default or trigger events. And I think, uh, that they were close to it when in terms of how much their assets, their cash, and their inventory has to have a certain dollar amount. If it falls below that, it's a problem. But the thing is, that's the only thing, in my opinion, holding this stock back. And it's not even holding it back. If it they cut costs, so 33% of their labor force has been cut. They lost their founder and CEO, the person who created the iRobot. He left the company. And I almost think that's like a good thing, because what he was doing, he was trying to get the lawnmower going. They were spending so much money on research and development. And then as the COVID boom went away and people, there was a slight slowdown in their business, they were still spending. So at some point, their R&D and cost actually started to exceed their revenues. It was like crazy stuff. So now you lost the CEO's gone. You can have someone in there with a fresh set of eyes who's not accustomed to spending whatever they want on any project they were going to do. Which, it's, if you do research on the guy, it sounds like what he was doing. Air purifiers, like the whole kit and caboodle. However, I mean, it's an old cliche, but now you look, and I think they cut a lot of those costs. I think costs are going to come in. They already talked about on their last conference call that the second half of the year they're going to be returning to profit. This quarter, which they're going to report, I think August 7th, is going to be an issue. But I think it's a forward-looking situation here. It's like, if the company's not going bankrupt, you already had to see the new CEO buy shares at 12.28, so he's finally in the green. If they're not going bankrupt, it's going $20. It's going to go 25, if not higher. So, yeah, that's kind of the thought process there in regards to getting the strikes there. They still have $100 and something million in cash. They did the settlement with Amazon. Amazon paid them 95 million. I think 11 million they had to take out for costs associated with the breakup, and then the rest that goes to pay off. Some went off to pay the loan. The other one to hold as that $40 million holding placeholder. I don't even know what you want to call it, but ran for another day on iRobot, but at 1450, I don't think it's out of question. It has a 20% short interest to boot. So you start looking at the 20% short interest, and you're like, when did these people get short? And if you look at the short, it's pretty consistent. So these people have probably been short a while, waiting for it to maybe to go to zero, and it's starting to bounce, right? So then it's the people, are they going to give up on it? Or is there going to be rumors of some M&A? Is GameStop with their $3 billion cash hoard going to buy them? Roaring Kitty getting it, whatever. All right, I can go on rants for a while, but so you understand my rationale in adding those September strikes. I still have the August 15s as well. Don't be surprised to see me add more, especially I'll probably wait till tomorrow. I want to see the market kind of hold up a little bit. But yesterday was almost a tell fried robot, because it was holding its ground even in the market chaos, right? It was holding there. And typically you see some of these heavily shorted names, the bears like to take advantage of these names in market weakness, right? It's just snowball effect. You got people selling, and then the shorters say, hey, let me take advantage of it. Let me instill fear in people and accelerate the sell-off, and then more selling, then more shorting, and then it's just like one of those self-fulfilling prophecy situations. Anyway, rants for other days. Hopefully over 13 today, over 14.50 tomorrow, and Moonshot over $20. Make lots of money on the calls. Be outstanding. And then my last little piece here is VKTX. Grabbed the calls weren't up as much as I thought they would be at the open, and then I was looking at August strikes, and I, I don't want to be in a situation where I miss out on some kind of data and have to keep chasing after different monthly strikes or weekly strikes. So I went and got the September calls. If you look at the August calls, the calls are up 200. The 180, the 85 strikes are up 150%. The 90 strikes are up 225%, and this stock is up. It's up 33% today, right? So you would think that if you were holding those calls, you would be rewarded a bit more, but it's because there's a lot of premium baked into the calls already. M&A premium, data premium, M&A data premium from other companies in the GLP-1 space. So it makes it difficult to trade these on a risk reward basis. But I went and got to September hundreds, and they're green, so they're looking pretty good. Hopefully it gets over $70 here. But it's mind-boggling. I keep saying, and I've said this for a long time, VKTX just drives me nuts. Back when it was $8 stock, it used to drive me nuts. It would squeeze, it had a huge short interest. I never understood why people would sell the stock. I'm like, wow, this company has a huge pipeline that all it's going to take is one pipe, part of my pun, to hit. And if that happens, it's going to be a multi-bag. And I look at it, 50, $67 right now. I'm like, this, especially with that update yesterday. Not only is there, and I've said that the drug's best in class, the drug best in class in adverse effects. Their oral is almost best in class. The The Roche that came out has better weight loss percentage, but you don't know any of the stuff on that Roche drug, the adverse effects, the dosing, the dosage, the you don't know any of that stuff. But you do with VKTX because they have the best in class oral solution, or almost best in class. But they're so comfortable and confident they posted all the data on their cohort for their oral GLP-1 drug. So it just drives me nuts that it just sits here and it's like they have the best in class in that. They might have a once monthly shot for weight loss. Nobody's going to have that. They have possibility of 100 milligram dosage, which I'm sure is just going to be phenomenal. And they say that no adverse effects with that dosage. Just, I mean, there's so many little buttons. And then you have the NASH, right? So uh, we'll have to see how everything plays out here. I can go on rant, and I've been going on rants for quite some time uh, on VKTX. I just it just doesn't make sense to me. And maybe nothing happens. And they just got rushed to phase 3, right? So the FDA said, don't worry about phase 2B. You go right to phase 3. I mean, that's crazy, right? So so if you're an analyst and you had your timeline of when come to market, gets marketed, the revenues, the rollouts and all that stuff, you got to pull that in. You got to move that forward 12 months to 18 months. That's crazy. So all your models have changed, right? And I mean, it's up 33% today, but it should be up 50% or more. But still has the huge short interest, like over $1 billion. It's $67. I don't know what 15 million shares short is over. It's probably $1.2 billion worth of stock someone is holding, or a whole slew of people are holding short. That's just mind-boggling to me. They're betting against this. So all right, I think that's it. Sorry, I'm out of breath. Sometimes I get pretty passionate. Turns up here at $9. I mean, surprising. Had some spikes yesterday, some spikes today. Hopefully it's Citadel, Kenneth Griffin adding to their passive stake. Maybe it becomes an activist stake. Although I don't think there's anything much with Turn. We're just waiting on it. Their oral phase 1 oral data is going to be out any day. So any day up through December 31st, but it could come out tomorrow, it could come out today. Um, and I think it's going to trade a substantial if there's decent data. And that's it, folks. Let's have a great afternoon. Hopefully tomorrow's a great day. PC data comes in line and we have more fun. And hopefully the SPY holds 541 here. If that happens, I think that'll be setting up nice into tomorrow. Have a great day, folks. Rock and roll.